Okay guys, welcome back to our channel. Thanks for tuning in. Today's video is going to be a collaboration video. Obviously myself and Wolves of Crypto do fortnightly collabs. So we're back here today talking about Bitcoin and a recent price action. Wolf, what do you think? What do you make of it? What do you think about this recent volatility? Have you got a few charts you want to show us? You got anything you want to say?
Yeah, I'll show you one chart first off, and I think what I was thinking about this morning mostly is the fact that obviously we have intense volatility, and we were just talking about that before we started this collaborative video here. Really intense volatility, just massive price pumps and dumps out of nowhere, really. Technicals were kind of out of the question in those matters, but one of the things that I'm really looking at is the fact that this current price action, obviously you guys would know we're on this major, let me remove these MAs, major yellow macro support line. We're testing it right now. And since we're on a price point of major support, we generally see that volatility start to play out. And we generally see some bottoming out patterns start to play out as well. What we're seeing right now, in my opinion, is something that it's way too early to tell, but something that's quite akin to what we saw in May to July 2021. Where we saw this slightly downward sloping price action, mostly sideways with massive scam wicks up and down. The major support zone in that period of time was 30K. We even closed below 30K at one point just to add to the fake outness of it, and then massively pumped up and kicked off the rest of the bull market. And I think that, you know, my views on the market haven't necessarily shifted too much. I still, if I had to guess, I would still say we'd stay a Q4 bottom. But as for the price point of that bottom, as for whether we hold this macro uptrending support or not, I think it's very, very much in the air. And I think this price action around that macro support zone is maybe starting to slightly convince me that we probably will see a fake out below it. But I'm not entirely convinced at this point if we have enough evidence to say we're going to drop below it or not. And that's something I'm gonna have to try explain a bit more, because I don't think I've explained it to the full justice there. I'll explain it a bit more towards the end of this video, or sometime in this video, of course. But yeah, what do you think about the price action? What do you think about the volatility right now? Do you think that a fake out would be something we'd see from this macro line? I think before I ask you that question, before I pose it to you, I would say that, you know, I know you've been talking a lot about 16.5K. I would just like to add that the 300 SMA, the 300-week SMA is actually at 16.5K right now. And so that might be a relatively interesting price point for us to bounce off of. What do you think about that?
Yeah, so as you probably know, a lot of your viewers probably know, and I've talked on this collaboration for a long time about this uptrending support line is something that I talk about a lot. I really believe this uptrending support line is a really important zone for the market. Well, I guess we'll start on the macro today and just kind of break down and go to the short time frame. But just briefly, the macro, I think one of your questions were, you know, what are the chances of actually dropping below here? And I guess we'll answer that again in a little bit more detail when we talk about the short-term time frame. But you pointed out the 300-day moving average, and the 300-day moving average is a great target. It did touch again on the 11th of March 2020 on that COVID crash. We actually came down and retested that 300 moving average, and it's currently sitting around 16,500, like you just pointed out. And I do think we've got a possibility of actually coming down to 16,500. Even if we come down to 16,500, I don't think this trend line would have been lost unless we close a 7-day candle below the trend line. So until then, I'm still going to be classifying this as massive support and a potential zone to bottom out in. I think that's about it there, Wolf. I don't really want to go into too much detail for macro. We've talked a lot about the macro in our previous videos. I think everything in regards to what we've talked about on the macro is still very much unchanged. Not really much has happened. I think on the short term, really, we've only just pushed sideways almost 2 weeks now. So I don't know, if you want to add anything to macro, Wolf, let me know, but I think I'm good talking about the macro. I would like to point one thing out, and the only way I believe we drop below this trend line and actually close a 7-day below is will be driven by economic factors. So if interest rates and CPI numbers are worse than expected, then I do believe we'll have that negative news event to potentially facilitate this drop downwards and a continuation downwards to Bitcoin. But I do think we have to be objective here and realize, you know, we don't have any data right now that does suggest we go any lower. And the only data that people are using to suggest we go lower is speculative data, because the economic data that we do have has been priced in to a certain extent for financial markets. And obviously financial markets move much faster than the economy. For the economy, it takes a long time for this data and this news and these changes to be priced into the market. So obviously consumer spending, all this kind of stuff, it takes time. But for financial markets, it's generally more rapid. They generally have faster drops, faster recoveries, ECT. So for that instance, I would say ignoring speculative data, ignoring information we don't have currently available, we have to assume this is going to be the bottom. Now, when the data does present itself, when we have the CPI numbers, when we have the FOMC minute meeting interest rate numbers, then we'll have a more of a clearer understanding and more data to actually assess the scenario, taking into consideration that. But saying right now, we're going to go to $12,000 because interest rates are going to continue to rise, that is not technically objective analysis. That is an assumption you're making, and you're running the risk of ignoring other significant information or data points on the basis of, holding yourself to a bias. And although it's a real potential that we do drop lower, and we do have our charts set out to, identify those drops lower, we do have to understand that, a support is a support until it's lost. And if we do lose that support line, which is indicated by that gray box, we will see 12,000, we will see 14,000, we may even see $10,000, and Wolf, I'll get you to talk about that in a second. But until then, we do have to identify this and be aware of it at the least.
Yeah. And I think, you're completely right. I think that it is for sure an assumption that isn't necessarily based off, objective analysis, because we simply don't have the data available at this point in time. And if the data does come in, then we can definitely act on that and start to make those kind of predictions. Now, with that said, if you put a gun to my head right now and told me when and where the Bitcoin bottom would be, I would probably say Q4 at 12 to 14K, right? But I'm understanding in my analysis, I'm trying to demonstrate to my viewers, and whether you guys want to listen or not, that's up to you, that at this point, there just isn't the data available. That's if I had to guess. And so, what I've been looking at the last few days, and I wouldn't mind getting your opinion on this as well, is things like, for example, the Pi Cycle Indicator. I don't know if you use it. We've got Pi Cycle Indicator telling us that Pi Cycle Top and Bottom Indicator telling us that not quite, the bottom's not quite in, but it's very, very, very close to being in. And with that logic, it would assume the bottom would be in the macro uptrending line. We've also got, for example, the RSI on the weekly and the monthly at the lowest levels we've ever seen historically, literally ever on Bitcoin. We saw the biggest red month on Bitcoin ever in the month of June. And one of the counter arguments I put to that the other day, even though I'm admitting these are brilliant kind of pieces of information we can use to determine that, hey, maybe the bottom is in here. But one of the counterpoints I put to that the other day is that, okay, well, these things are happening. These things have never happened before. And when these things have happened in the past, they've predicted the bottom. But maybe that just means we're in a unique set of circumstances. And maybe the old methods we used to predict the bottom should be thrown out the window. Now, with that said as well, I understand that we can't say something like that, because obviously the best invest with the trend until it ends is one of the leading premises of trading and investing, of course. But another thing I wanted to look into as well regarding these kind of old methods of predicting the bottom was the CBBI. And I think we both looked at this quite a bit during the bull market. I'm not sure. Have you looked at this before?
Look, I looked at it a little bit in the bull market, but like I said, I'm not a huge fan of this kind of analysis, so I'd rather just look at the charts. But I know of it.
For sure.
I know of it.
Yeah, so this is just another example of that kind of thing. It's like, well, the old methods of predicting tops and bottoms. It's like the CBBI, basically a variety of on-chain metrics. Again, you know my opinion about on-chain, but I'm just being objective here. Variety of on-chain metrics that are used to predict tops and bottoms. It predicted 2013 top, 2017 top, roughly predicted 2015 bottom and 2018 bottom. And right now it's getting very close to a bottom, but we need to understand as well, it didn't actually predict the 21 top. And that just kind of outlines the problem with a lot of these old methods, I think, that we're trying to use here in terms of the macro situation. It's like we're using methods that worked really well in the past, but let's be real. I mean, we haven't seen a typical cycle. We saw a double top cycle. That's never happened in the past. And so maybe that's thrown off the entire kind of, ballpark here. And I think that what you said about remaining objective and waiting for the data to come in is 100% the correct move. Yeah.
Yeah, I just kind of like going off that again. I really find it baffling that people, they ignore support. And it's just that classic saying that people are usually going to be bearish at support and bullish at resistance. And I think no matter what data you have available, you have to just be able to identify the fact that at support, there's always a chance that you bounce. And I think if you're going to be taking a bearish stance here and you're thinking, okay, we're definitely going to $12,000, or you're saying to yourself, I want to buy $12,000. At a bare minimum, guys, you should be sitting there and thinking, well, there is still a chance that we could bounce here. And I have to be prepared to capitalize on that if it does occur. And I think that's what we're trying to stress to our audience. What I'm really trying to stress to you guys too is Do I think the bottom is in? No, I think the bottom's in when we get a reversal. Do I think this area could be a potential bottom? Yes, I'm very, very strongly suggesting that this could be a potential bottom. And do I think we could go lower? Again, yes, I think we could go lower, but we don't have the data to confirm that yet. So it's very much like one of those periods right now where you're kind of just waiting around, waiting for that, trigger to occur, and then you're kind of jumping on. But the best thing to do now is to have a plan for all scenarios.
Yeah, for sure. Do you want to jump into the shorter term?
Yeah, I'll bring up my chart. We'll go shorter term. Today's video is going to be a little bit all over the place. Like we said, our collab videos are usually really, really in depth. Like I know our last video we did 2 weeks ago kind of covered almost everything you need to know about the macro. Like there really wasn't any stone left unturned. I think the only difference in this video will be the short term, because that's the only really thing that's kind of changed. And even then, the short term is relatively kind of in the same range. If we go ahead and look, the last how many day periods, we've been basically in the same place we were 22 days ago. So we are definitely pushing sideways, and I've identified that we are in a symmetrical triangle formation. And this is one of the reasons why I do believe we're heading down, because the symmetrical triangle formation, as we already know, is a bearish pattern. And yeah, we can go ahead and take measured moves and we can do all that kind of cool stuff, but measured moves can only take us so far. What I do want to identify are critical levels of contention on the chart. So we do have obviously 16,500, and that is that 300 SMA, which we'll point out at the start of the video. We have this major support block over here, and this is it doesn't look like a huge support block. It looks pretty big when we zoom in, but on the grand scheme of things, guys, the support block isn't massive if we zoom out. It is, however, though, the biggest support block we've had on Bitcoin for a long time. We do have bigger ones lower, but this is a major support zone. So if we do lose, 17,600, right, which is a lower level of support, we will most likely see a retest of this. Until we lose that level, I don't think we're going to be retesting 16,500. I think we're going to be kind of remaining in this range over here before we push upwards. But yeah, fake out is definitely possible. Anyway, back to the short-term time frame. So we talked a little bit about the volatility already, and it has been very, very volatile. We've seen these rapid pumps and dumps, and I've been telling my members and my subscribers and everyone else who follows that, these moves don't seem natural. They seem very, very artificial, and I'm not too sure, exactly what is causing this, whether it be accumulation by big players, whether it be liquidations, whether it be squeezes. It really could be a whole range of things, but we generally don't see, for example, 11% moves on Bitcoin in 2 hours. That's a pretty big red flag in terms of, natural price action. At the end of the day, we do want the price to move naturally, to move healthily. This immense volatility is not going to be good for sustainability of price. Like, it's very hard to sustain the price up here after we've just had a 13% pump. There's a very high chance we'll crash back down. And we've seen it happen, over and over and over. And just in the last 24 hours, we've seen, 2 immense pumps, and we're most likely going to retrace back down. Wolf, what do you think about that?
I think that the short term is looking, well, I'll bring up my chart and I can give you a look. So yeah, I agree with what you said there. Definitely ranging sideways, 22 days of sideways range. It kind of reminds me a lot of what was happening prior to this sideways range. We had the other sideways range up here in May, throughout the entire period of May. And I think that just looking objectively off the data, we have to assume that most likely we break this symmetrical triangle. I don't have the one you got drawn in there to the downside, but I do have the uptrending line. And what I can identify as well is that in the very short term, the last couple of hours, using the neckline from this, although messy, I think it was an inverted Adam and Eve formation, using the neckline, extending it along, we can consider we've actually closed the candle below that. It's acting as resistance right now. And I think that seeing as, what we saw there was kind of like a double top formation with bearish divergence, I think that at least at this point, and I guess you guys will know by the video it comes out, we'll be coming down to this uptrending line and possibly doing something like this and breaking it to the downside. I think, even using your triangle formation there, we don't have much time left to consolidate. We're going to have to make a move probably within the next few days or couple days. And I think that move is going to be downwards. And I think that even if we bottom out on this macro uptrending line, within the next 2 weeks or so, I think that we will be seeing a retest of the low. It's not very often. And even, macro bear market bottoms, everything, even in short-term bottoms, it's not very often at all that you see a massive crash, test a level, and then never test it again. Generally speaking, you come down and you test it again, if not test it multiple times before forming an actual bottom, and then giving people the confidence to buy into the market and hence putting in an uptrend. So yeah, I think it is logical to assume that we will test this level again, 17.5K at a minimum. That's my opinion on shorter term. Did you have anything else to add to the short term before we jump into some questions?
I think what I think people would like to hear, if you let me screen share for just for 1 second, is kind of what you should be doing now. I really like to go ahead and like answer these kind of like topics. So it's like really nice telling people what's happening, but you know, some people just need a little bit more guidance. So it's nice to let them know what you should be doing. So what should you be doing in this current, you know, market environment? And this is a very volatile market environment, and there's no doubt about that. We look at the price action. There's been a lot of invalidations and validations and just sporadic price movements that generally wouldn't usually occur. And Wolf just showed you, it kind of reminds him of that pre-crash period in May this year, March this year, when we went up to 48K and when we crashed back down. You know, it was huge valleys and pumps. And if you aren't an experienced trader, if you aren't willing to lose money, because you will most likely lose some money in those periods, and if you have a tight risk tolerance, you shouldn't be trading this zone. Just simply wait for a confirmation of a break below or above to enter. If you are going to be trading this zone, your entry should only occur at areas of support and resistance. If you're trying to catch the middle range of a zone, you're exposing yourself to significant risk, particularly because of the volatility, and you should just consider yourself, you know, I'm not going to say anything rude, but you should consider that you should really consider your decisions a little bit more, you know, carefully. Now, I think that's all we want to talk about. I think we do have a bunch of questions to go over today. We've got a couple good ones. And Wolf, did you want to start off with one, or do you want me to kind of lead the way with a question?
You go ahead, you lead the way.
So one of the biggest questions I was asked this week, and one that I really want to focus on, and I think is really relevant for the current market environment, is the question was, how do I build back confidence to trade after I've suffered significant losses? And this is an individual who is down about 90% on their capital from the top. Obviously, an individual who didn't sell at the top, who held probably the entire way down, is now considering either having sold at the bottom now or having held on. And confidence is a really, really big one when it comes to trading, but some people, after significant losses, and I guess this is quite normal, you get scared to re-enter the market. You've been burnt, you're worried about getting burnt again. And the best thing I can suggest to rebuild your confidence to get back into the market and trading again is to simply, number one, take a week off, take a little break from crypto, even if it's like a 3-day break or a 4-day break. Don't leave the space, of course. Just take a few days to recuperate, mentally recover, take a mental break from the market, but sometimes that's what you need. Number two, and this is probably the big one, would be reduce your capital investments significantly. I mean, you're going back to trading with like 50 bucks or like $100. You're trading with a super, super small amount of money. And if that's a lot of money for you, even bring it down, $20. You know, you're trading with a significantly smaller amount of money. And the reason you're doing this is just to get yourself back in the game, just to get back in the water, test around, play around, maybe get a couple of low risk wins in there. When you start building up a few wins, your confidence will naturally start to come back. And after a bit of time, your confidence will be back and you can get back into the game. Now, losing is part of the game, guys. You have to remember that. You can't always win. Myself, for the whole year, I've got about a 78% win rate, all right, which is incredibly high. Usually people in crypto have about, you know, successful traders, 60%. The majority of crypto traders right now probably about a 20% win rate. The problem with this is, during bull markets, we hold ourselves to standards which are usually unrealistic and unattainable in bear markets. And you have to understand that, you know, obviously losing is all part of the game. And the number one thing you need to do to manage that is obviously apply your risk management strategies. Wolf, do you have any more suggestions you would say for someone who's, you know, got wrecked, wants to get back into trading, but is currently struggling mentally to bring themselves to trading again?
I think the advice would be don't trade all the time. In the sense that don't trade, you know, if you're struggling mentally, it means you probably, you know, as you said, lost a lot of money, which means you know, no offense to you, probably made the wrong decisions, which generally means you probably might not have the experience, or maybe you have a lapse of judgment in a, you know, anomaly kind of case. But generally speaking, you didn't have the experience to do what you were doing and you did it anyway and you lost money, right? That's kind of what it is. So I would suggest that you stop trying to trade ranges. You become a breakout trader, because breakout trading, even amongst traders, is way easier, way less stressful, and it's way more, you know, I guess, more likely to give you a win. So become a breakout trader. Don't try to trade ranges. Those are two pieces of advice I'd give you. Maybe, yeah, as you said, limit your capital. Stop trading low capitalization altcoins that move very fast. Maybe try and trade, Bitcoin. Some of the big top 25 coins, they move kind of slowly. They're a bit more logical in their price action. If you trade coins with too low of a market capitalization, they kind of just do things that aren't expected by the market, and maybe aren't even expected by their own TA, because some whale might buy something and throw the whole chart off. You know what I mean? So yeah, those are some good pieces of advice. I think, and then also another piece of advice I'd give you, if maybe you're having a bad time, you lost a lot of money, is kind of higher your time frame, raise the time frame. So you might be trading on too short of a time frame. I think this is a mistake that a lot of people, particularly leverage traders, would make, is they trade on very high leverage. I'm not saying you did that, whoever this person was, but they trade on very high leverage and they trade on very short time frames, 5-minute charts. And I think it is worth noting that if the higher the time frame, yes, the longer stuff's going to take to play out. And potentially, I don't know, the less money you can make potentially. But also, if something does play out in the higher time frame, it's less likely to be a fake out, right? If you get a breakout of a triangle on a 1-day time frame, it's happening for 3 months versus a 1-minute time frame that's been happening for 3 minutes or 30 minutes. The point is, what I mean? I'm kind of finding hard to articulate. Zoom out. Trade less often, trade breakouts, don't trade ranges. That's what I'd say to you. I'd kind of lost there a little bit, but yeah.
Yeah, no, you summed it up pretty well. I think a combination of that advice, and I think I would like to slap one more thing on there. And if you understand this phrase, you understand this phrase. A lot of traders who are new to this market, or a lot of traders who are new to any market, they feel like they're on a clock. And if you understand what that means, you'll understand what it means. It means you feel like you're rushed to make money. You feel like you have to trade daily. You have to take 10 trades a day. You have to trade this much. You have to make this much. And if you've got that feeling that you're on a clock, you're in a rush, you're not going to make the best decisions. Slow it down. If you're searching too hard for a trade, you're generally searching too hard for a trade, right? You have to slow it down and wait for the trades to present themselves to you. Create your charts, draw up your lines of support or resistance, identify the macro trend, look for potential entries, and wait for the trade to come to you. Okay, for myself, example, I'm going to show you something. Look on the right hand side of the screen. You can see I've got hundreds and hundreds of coins over here. Okay, I've got hundreds and hundreds of coins. You see the coins with the little flags? These are coins that I have potential trade setups set up for. Now the reds are short terms, the yellows are active trades, and the blues are scalps. All right, so I set up differently. That's just how I personally do it. But every single chart over here, I have my TA set up. I have a chart set up. I have areas of validation and invalidation. I have triggers and stop losses and alerts set. And all I do is I wait for the price to enter a zone that I'm willing to buy, and then I look for an entry and make the trade. If you've got a blank chart, let's just take a random chart for example. I haven't looked at this one for a long time, and you just got a blank chart, right? And you're thinking, okay, it looks good. It looks like we're bottoming out. It looks okay. We've gone down a lot. I'm gonna buy now. Like, if that's the extent of your analysis and you're worried about why you're losing, there's your answer. All right, you need to have a little bit more data and a little bit more backing behind your decisions. All right, so the big one over there is knowledge. Obviously, the more knowledge you have, the more understanding you have about not only how the price moves, how the market works, but also what the indicators and the data is suggesting, the better your conclusions will be and the better your actions will be. And the better your actions, the better your results, the more profit you make. Okay, let's move on to another question. Wolf, do you have another question?
I got an interesting question. I'm not sure I'm going to have a clear answer to it, but someone asked, what's the last price to defend for Bitcoin before you feel like it's failed or died? So what's the lowest Bitcoin can go before it dies, essentially?
As in completely dies?
Dies out, can't recover, can't go to a new all-time high again.
Okay, I think this is a very, I feel like this is one of those questions a lot of people are probably considering right now. Hey, when the price is down a lot, people are getting a little bit scared, a little fiery. And I just want to quickly say I don't think Bitcoin's going to die. I don't think we have the data to suggest it. I think, if anything, Bitcoin's got a very bright and prosperous future, cryptocurrency. But Wolf, I'll let you take over and talk about that.
Yeah, I think that it's very hard to say what price Bitcoin would have to go to for it to die. I mean, Bitcoin's gone down massively in the past. It went down 87%, 86% in 2015, 84% in 2018. It's down 70% right now. All the times it's done that, it's recovered. It's had bear markets that lasted 3 years where no one was talking about Bitcoin on 2 separate occasions. I think it'd be very, very unlikely for Bitcoin to die. And I don't think if it was to die, it'd be triggered by a price, a specific price. If it was to die, it would probably be triggered. Well, it depends what you mean by die first and foremost, because you have to be precise with these kind of words. But just in a general sense, it would probably be caused by intense regulation of some sort. But again, I see it as very unlikely. And even if that was to happen, it definitely still have some sort of life in the quote unquote underground, as you would say. But yeah, I don't think Bitcoin's going to die, and I don't think it'd be triggered by a certain price point. So, but it's an interesting question.
That's a great great answer, Wolf. But yeah, we have to also realize that like Bitcoin, no matter what happens, even if there's significant regulations, even if all exchanges shut down, even if Tether blows up, even if the worst of the worst things happen, Bitcoin will actually always remain above a certain price because there's a significant amount of Bitcoin out there that's just genuinely lost on wallets that can't be accessed. So people were saying, Bitcoin is going to go down to like $200. I don't even think it's possible for that actually to occur. I think there's too much Bitcoin already that's in circulation that's completely lost, holding the price up past a certain level. Now, don't quote me. I don't know what level that is, but for people who are saying Bitcoin is going to zero, it is actually theoretically impossible. It won't ever actually occur.
That's correct. Yeah, I think it's like 1,000.
Yeah,
I heard that somewhere.
It's up there. It's not a small amount, that's for sure.
Yeah. Yeah. So yeah, I think unless you get any more questions, I would like to look at something. Obviously, look at it every video. It is, of course, the Crypto Academy, and we've been talking a lot in this video, specifically in the Q&A section of this video, about how you can better yourself as a trader. Bang, this is your place, right? If you don't want to implement the steps we took there, or if you want help implementing those steps, this is for you. Become a trader, 10-unit course developed by both of us here, the Wolf and the Whale. At the start of this year, it took us, I think, 4 or 5 months. We were talking about it for a long period of time, though. We've been talking about it since late last year, and we finally got around to it, and it's just released here. I think it's released in May, which is 2 months ago. So Become a Trader 10-unit course takes you through everything you need to know, even starting at what is cryptocurrency all the way through to how to find trades and how to have advanced risk management, what's the right mindset, literally everything. And we just actually created, in the last few days, we've just created a kind of introduction video where I personally will take you through some of the units in the course, show you what they are so you can see them visually, show you how we teach you, and show you why we do it in that format. And if you want access to that video, as well as the relevant payment information, chuck us an email here at cryptoacademycourses@gmail.com, and we'll get back to you swiftly. So I think if you got nothing else to say, I think we'll wrap it up.
Yeah, I think that's good. Just quick little footnote. Today's video was just a little short update. Just wanted to give you a little discussion about the short term. If you do want to find out more about the macro and you want to learn about the macro, what's happening on the macro, how the economic situation affects the price, the 4-year cycle, all that kind of cool stuff, go ahead and watch our previous collaboration video. We did about a 40 to 50 minute video, and about 20 minutes of that was talking about the economy, talking about the macro. And if you're interested in finding out more, just go ahead. You can go to either of our channel, obviously Rules of Crypto or MegaWhale Crypto. You'll find the links down below, and just go to one of our videos about 2 weeks ago. It should be titled something about the Wolf and the Whale, and you'll be able to find it there. All right, guys, with that being said, we'll catch you in the next video.